New home sales beat estimates by 19% in the latest report covering July. That's a 10.6% jump compared to June and up 5.6% year over year. New homes are still selling like crazy, and we'll cover that report here in a minute. Mortgage rates spent most of the week below 6.5%, but even with rates this low, we actually saw a decrease in the number of people applying for mortgages. But you've got to remember, while these rates are lower than we've seen for the last year, it's not like these are actually low rates. For me, real buyer demand is not going to enter the market until we get mortgage rates that are consistently below 6%. So we're not there yet. But these lower rates have brought an increase in the number of people listing their existing homes. So inventory continued growing steadily this week. Still not as quickly as we needed to, but much better than the last few years. We've passed the peak of home prices for this year, and you can expect to be seeing less and less new listings hitting the market every week for the rest of the year. We'll be covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is August 26th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. Okay, first up is market news. And we're starting today with that new home sales report for July, straight from the Census Bureau. Something you may not have realized is that these high mortgage rates have given home builders a massive advantage over the existing home market. If you want to buy an existing home on the market today, your mortgage rate is going to be around 6.5%. But if you want to buy new construction, they're offering rates as much as 2.5% below that. Right now, I'm seeing a lot of new construction offering anywhere from 3.99% to 5.5%. And this is how I know that once mortgage rates for everyone get below 6%, that's where the real home buyer demand is going to be, because builders have consistently been offering below 6% and have been making plenty of sales there. So they've got the rate advantage, and then add to it the fact that they're able to create and regulate their own supply, and it's been a dream scenario for builders. So here's what we saw in this report. Just look at the chart. So this huge jump you see up from June, that is a 10.6% jump, which is also up 5.6% from last year. So this peak was actually last year, and we're 5.6% higher than that. So you can see that's pretty crazy. I mean, look at where we've been the rest of the year. More new sales than we had last year. Then the other chart you need to see is the month's supply of new houses. This basically measures kind of the speed of sales. So having that big jump drops the month's supply of houses that we have. This is a huge drop down to just a 7.5 month supply of new construction, which is the lowest we've been in the last year, and it's the same point that we were right here. That would be September of 2023. That's the last time we had 7.5 month supply. So the point is, new construction still has the advantage. They're still selling plenty of homes quickly. But here's what's interesting is the dynamics are changing. In fact, just minutes after this report was released, Powell said at the Kansas City Fed annual conference that the time has come for policy to adjust, meaning it's time to cut rates. Now, while we all were already expecting a September rate cut, these remarks are actually the clearest sign we've had that this actually definitely is happening. And as I talked about in this video, the Fed cutting the federal funds rate doesn't necessarily mean mortgage rates will come down. And I know that's confusing, so if you really want to understand, just watch this video. In fact, the September rate cuts are probably already fully priced into the current mortgage rates. That's how we got below 6.5%. That was the market pricing in September rate cuts. So please don't think that once the September rate cut actually is announced, that rates are going to go down further. No, they've already gone down. And actually, if the market thinks they've gone down too far for the actual rate cut announced, mortgage rates could go right back up. Again, if you want to understand, watch that video. But the point is, we know that over the coming year and moving forward, the expectation is mortgage rates are going to continue dropping. We don't know exactly how much or exactly how fast, but we know the trend should be down moving forward, which means the more that mortgage rates drop, the less of an advantage these home builders are going to have. Because right now, your options are either a 6.5% mortgage rate for an existing home in the city, or you can get a 4.5% rate for a new construction home 30 minutes outside the city. And for many people, this isn't actually even a choice because the 6.5% rate has actually made it totally unaffordable. So their only choice is the 4.5% rate in the suburbs. But as rates drop, if that gap becomes more like 5% for an existing home in the city versus 4% for a new home in the suburbs, that's going to make things a lot more competitive for these builders. Also, as we've talked about a few times over the months, home builders are slowing down on their new builds. They're pulling less permits, and that was because rates have been too high. So right now, new construction inventory should be slowing while existing home inventory is growing. Add to it that rates are going to be getting more competitive, and the advantage these builders have had is going to be getting smaller and smaller. But the interesting thing about this is, as we covered, I believe, last week, home builders' gross margins, even after spending $20,000 or $30,000 in incentives buying down these rates, their gross margins are still above 20%, and in some cases as high as 29%. So they've still got plenty of money to work with as far as these buy downs. So here's something I think could totally happen. Builders have never had to offer such crazy low rates before, so I don't think it ever registered for them that they can generate way more sales by offering significantly lower than market rates. So I think now that they've seen what's possible, they may just continue this for the foreseeable future. So here's a scenario. Mortgage rates come down to 5%, let's say. That brings in a lot more buyer demand and it starts to drive prices up. It doesn't have to be straight up, just means prices will go up normally like they do. This now gives home builders even more margin to work with. What's to keep these home builders from offering, let's say, a 2.5% mortgage rate? They're already offering 2.5% below the market rate and still keeping their gross margins well above 20%. So if home prices go up and they just keep offering their same 2.5% mortgage rate discount off whatever the market rate is, then their gross margins go up and they can make a lot more sales. So I actually don't think it would be crazy at all to see builders offering some of the lowest rates in history over the next few years. But of course, the problem with this thesis is it assumes builders will have enough inventory, which as of right now, with them slowing down on permits, would not be the case. And as we've seen a few times over the last few years, especially in the summers, builders were selling too many houses too fast and they actually had to put a cap on it and say, this community can't sell any more houses this month, and then they would start a wait list. So of course, if they start running out of homes, they're not going to offer these crazy low rates. But I actually think that would be a good thing, because if these builders could see the evidence that they can continue offering crazy low rates, selling more and more houses, that means they'll get to build more and more houses. And the thing we need to get out of prices going crazy is more and more and more supply. We need a lot more supply. So I think this could actually be a good thing. As well as home buyers, imagine buying at a 2.5% rate. That would be pretty awesome. Anyway, let's move on. Let's start with national housing inventory. This week, we had a small increase of 6,271 more homes for sale in the country. That gets us to 40% more homes than we had last year. And it gets us to a total of 704,744 homes available for sale in the country. A fun fact is, this same week last year, inventory was only at 503,000, so about 200,000 more homes better than last year. And I also want to point out, if you look at both 22 and 23, inventory continued rising all the way through October, November. So maybe that trend continues this year and we get somewhere close to 800,000 before starting our decline. Then for reference, the all-time inventory bottom of 2022 was 240,000 homes for sale. The peak of last year, we had 570,000 homes for sale, and this same week in 2015, we had about 1.215 million homes for sale. Now looking at new listings, this week we're still right on track with 2022, which is great news because as you can see, way back here in May, we fell below 2022 and we're kind of right in the middle of 22 and 23 until mortgage rates dropped. That prompted a lot of people. They thought, rates are dropping, that's going to bring more buyers, I need to list now. So that brought us actually above 22 for that week, and the good news is we've stayed right on track with 22 since then. So this week we actually had 64,595 people list their homes. Long story short, to get back to a balanced market, we actually need quite a bit more than 2022's new listings numbers, but this is the best we've been doing all year. And this just shows you how much the market depends on rates, even when it comes to listing homes. Low rates gives the perception that it's going to bring more buyers and causes people to list their home, as well as low rates gives these home sellers hope that they'll be able to buy their next home at a more affordable monthly payment. And then lastly, what you need to see on this chart is that you can expect less and less new listings every single week for the rest of the year, significantly less, which means if you're being a picky buyer right now, hoping that inventory is going to go up and you'll have more options to choose from, that's not how it works. If inventory goes up from here, it's not because there's new options coming on the market. It's because the old homes that nobody wants are still going to continue sitting on the market, plus some of these new listings. But the options that you're going to have, the good options, are going to be smaller and smaller every week. So don't be fooled. Inventory can go up and you can still have less new options to choose from. That's what happens from here to the end of the year. Now let's look at the weekly pending contracts, and you can see the pending contracts have just been slightly above 2023 all year long. And actually last week we got almost exactly to where we were in 2023. This week we came back up. We have about 7,000 more homes pending than the same week last year, which equates to about 2% more. And in total, that's 368,363 homes under contract, which is very interesting because we have quite a few less people applying for mortgages this year compared to last year. I'll show you that chart in a minute. But just remember, less mortgage demand is not meaning less sales. It's actually somehow meaning more sales this year. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year, it's normal for a third of homes to take a price cut before selling. Looking at the national chart this week, we're at 39.9% of homes taking a price cut, and you can see we had stalled out for several weeks. We finally broke above that line, but it looks like we're coming into right here in September. The last 2 years it has been either flat or down. I think it's pretty likely that this line is going to go sideways and then kind of merge with what we did in 2022. So last year we got as high as 39.2. The year before we got as high as 43.2. I think it's likely we get somewhere around there this year. But it's normal for this number to be going up all the way through November, so don't be surprised by that. Okay, now we're moving on to mortgage rates. We started last week at a 6.53, immediately went to a 4.9, 4.6, 4.8, and ended very low at a 6.44. Again, this is a one-year chart, so you can see being down here just how much lower we are compared to the rest of the year. So lower than all year, but still not low rates yet. We need to get below this 6% before we see real buyer demand. Then looking at mortgage purchase applications, this is what I was saying. We have been significantly below 2023's purchase applications, yet we've been having more pending sales all year. And this week, we actually saw a pretty big drop. Well, big for where we've been. It's a 5% decrease in the number of people applying for mortgages, but it basically just gets us back to the bottom of this range. We've just been up and down, and as you can see, what we're coming into, we may see a small increase here. We're gonna have this big dip down here and then climb through the end of the year. So yeah, we've been tracking pretty closely. I would expect it to do almost exactly whatever we saw there, but keep in mind, even if we go lower than this number, which we likely will, that's what it looks like we're tracking at, we still should have more pending sales because that's what we've been doing all year. Less people applying for mortgages, more of them are serious and actually buying homes. Okay, before we move on to the local market data, if you're considering buying a home in Texas in 2024, two things. One, if you don't want to go broke buying a house, I've made a home finance course just for you. This tool is going to help you find with 100% accuracy how much home you can actually afford based on your personal spending habits straight from your bank account, as well as how much house you could actually buy today with that number based on current mortgage rates, the tax rates of where you're looking, everything. And then number two, if you're still a ways out but you just want to master the home buying process so you are fully ready and aware when it's time, I've made two courses for you. One is for new construction and one is for pre-owned homes. They're very different deposits, different contracts, different timelines. So pick the one that best suits you. Links to all of those are down in the description below. Now let's move on to the local market data, starting with the MLS data in Dallas County. In the last week, we had 500 listings. That's 82 less than last week. 284 closings. That's 41 less than last week. Of the homes that closed, 65 were immediate sales, meaning they contracted within the first week. That's 2 less than last week. 325 went under contract. That's 9 less than last week. In total, there are 2,226 homes either under contract or in pending status, and that's 26 more than last week. Now moving on to Collin County, 448 new listings. That's 97 more than last week. 224 closings, 29 less than last week. 38 immediate sales, that's 1 less than last week. 177 went under contract, that's 9 less than last week. In total, there are 1,827 homes either under contract or pending, and that's just 1 less than last week. Okay, let's move on to the Market Action Index, starting with Dallas County. All the Market Action Index is, it takes all of this data into account, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Above 30, we're asking how much of a seller's market are we in. We are a slight seller's advantage. We are at a 40 this week. Here in Dallas County, the median list price has still been steady for the last few weeks around that $425. Same with the median price of new listings. And what you can expect now is exactly what you see here. It's going to be a slow trend down through the winter. Average days on market it's exactly the same as last week. Median days holding firm at 49. Number of homes having price decreases, flat as well. Number of homes relisted, again, this is what happened a few weeks ago when rates dropped. A bunch of people who had listed before didn't sell. They thought, wow, rates are dropping, I need to list now. We saw a big spike. Even this week, 8.93% of homes relisted. That's why we're seeing so many more new listings right now. Every week we're having 8 to 9% of people relisting their homes. Though inventory, a small increase, about 30 homes increase. And of course the Market Action Index, it had a big trend down and it's been pretty flat for the last few weeks, but that should continue trending down for the rest of the year. That would be a normal market. So the point is, everything's looking normal. That's what we look at the Market Action Index for. Now moving on to Collin County. Collin County had a drop in median list price as it's been holding steady for a few weeks. We had a drop down from around the 575 range to 563. Now that is normal in that we expect it to trend down, but remember, anytime we have a bigger than normal drop in a week, that's just 1 week data. It could bounce right back. That happens all the time. But the trend is down and that's what's normal. Median price of new listings had a small drop, $5,000. Again, that's normal for the trend. Average days on market went up 2 days, which brought median days on market up quite a few. 7 days up on their median days on market. Number of homes having price decreases has been pretty flat for a while. It ran up quickly, a little above 50, and it's been holding above there for a long time, since July. Their number of homes relisted as well, seeing a small climb. Their inventory has been pretty flat compared to Dallas. Yeah, where Dallas is still climbing, they've been flat for several weeks now. And their Market Action Index is not quite to the lowest it's been. It's almost the lowest it's been. They're at a 37, which is also a slight seller's advantage. And just expect the trend and the pricing and everything to continue slowly going down for the rest of the year. Now moving on to pending sales. Both Dallas and Collin County look like they had an increase in pending sales. And Dallas County has been pretty close to 2022's numbers. Just look how low we were in pending sales 2023. But we're pretty much right on track with 2022. Let's see. In 22 we had 1,900 homes pending, and in 24 we have 1,863. And in 23, we were all the way down to 1,581 homes. So we're doing much better than last year. Collin County, of course, way incredibly more homes. That's because it is the number 2 fastest growing county in the country. So it makes sense. A ton of new construction there, a ton of growth happening there. So we're way above where we were either 22 or 23. So in 21 and 22, we were at 11 to 1,260 homes. And now we're at 1,644 homes, which is up a little bit from last week. So even though the Market Action Index is only a 37, there is still a lot of sales happening there. And the big struggle in Collin County is there's so much new construction offering these crazy low rates. A lot of what's dragging the Market Action Index down and the houses sitting on the market are the pre-owned homes that are only 3 or 4 years old, but they're having to compete trying to sell against these crazy low rate new construction homes. So it's actually kind of like 2 different markets out there. You have the new construction that's still selling pretty well, and then the older construction that can't really compete with the new construction that's sitting on the market, making it look like the market is much slower than it is. All right, now we're moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin County. These are ranked using that same Market Action Index number we've been talking about. Starting out with the hottest cities, Carrollton, Ferris, Duncan, and Louisville all remained in the top 4 unchanged. Grand Prairie actually heated up 4 spots spots, and Saxe as well. They both heated up from 9 and 10. Garland remained where it was. Lancaster cools off 3, Plano cools off 1, and Richardson jumps onto the list at number 10. And Balch Springs fell all the way from number 6 last week to entirely off the list. So Balch Springs cooled off quite a bit. Then we like to zoom in on the specific zip codes. The absolute hottest is Carrollton 75007, followed by Carrollton 75010, Dallas 75244, Dallas 75236, Duncanville 75137, Ferris 75125, then Hutchins 75141, Grand Prairie 75050, Duncanville 75116, and Garland 75044. So those are the hottest zip codes. If you own a home there, you can sell for top dollar. Then looking at the same thing with the coolest markets. Remember, 30 or below is a buyer's market, so these first 3 are buyer's markets. Leonard remains at the absolute coolest market. Then Van Alstyne cools off 1, Sunnyvale heats up 1, so they switch spots. Prosper remains at number 4, Anna cools off 2, Blue Ridge heats up 1, Rockwall heats up 1, then Lavon, Salina, and Melissa remain at 8, 9, and 10. Then the coolest zip codes, the absolute coolest, Leonard 75452, Van Alstyne 75495, Sunnyvale 75182, Dallas 75204, Rockwall 75032, Dallas 75220, and all of those zip codes are buyer's markets. Then moving out of that, Prosper 75078, Anna 75409, Blue Ridge 75424, and Rockwall 75087. That's it for this week. As always, if you're looking to buy or sell in the Dallas market, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.